There's a great debate in the investing world when it comes to maximizing long-term wealth. Do we focus on dividend companies that produce cash flow, or do we stick to the companies that reinvest that cash and promise future growth? The answer for most would be a combination of the two, and that, my friends, is where the ETF JEPQ comes into play. It invests in quality growth stocks while also producing a ridiculous monthly income stream of cash that has a yield in the double digits. In this video, we'll dive into the details that makes JEPQ flourish. I recently started a position in JEPQ in my portfolio, and I'm excited to tell you what role it plays for me at the end of this video. First, if you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please hit that subscribe button if you enjoy videos like this and you'd like to see more in the future. I'm working my way to 1,000 subscribers, and I really do appreciate you. Also, I would love to hear your opinion on JEPQ. Please drop me a comment below to let me know what you think. What is JEPQ? JEPQ is the JP Morgan NASDAQ Equity Premium Income ETF. It uses two methods to produce monthly income for its investors. It buys and holds US large cap growth stocks, and it sells call options on the holdings. It primarily buys stocks from the NASDAQ 100 index, and it seeks to approach the overall returns of that index. And I view that as a good thing because the NASDAQ 100 total returns have crushed the S&P 500 in the 38 years since its inception. JEPQ's holdings have a 67% overlap with the holdings of the NASDAQ 100 ETF QQQ. Compared to QQQ, JEPQ has a lower ceiling but a higher floor because of the call option strategy. The return on the option premiums is the vast majority of the juicy 11.8% trailing 12-month dividend yield. For a little perspective on that dividend yield, if you had $100,000 in JEPQ, you would receive just under $1,000 every single month of dividend income. That is superior to any high-yield savings account or money market that you can find in that regard. The call option strategy does lower your potential ceiling when the stocks take a big swing to the upside. So how this works is the fund managers of JEPQ will sell call options to potential future buyers of the stocks. Someone out there basically pays a premium to have the right to buy the stock at a set price in the future. So for example, if a stock is worth $100, someone might pay $2 for the option to buy that stock at a $110 price within the next 1 month. So if the stock price shoots up to $130 within that time frame, the person will strike at $110 per share and will be forced to give up those shares at the lower price, thus losing $20 per share. That's how the overall ceiling is lowered. But no matter what, the premium income goes directly in our pockets. Even if the stock price never exceeds $110, it'll just expire and we will get that income, thus the high yield. So JEPQ is a lot like QQQ on its base holdings, but again, it lowers the ceiling. So if the market goes bonkers, we're not going to get quite the total return of QQQ. But in theory, if the market really struggles, because QQQ tends to be a roller coaster, with the struggle, our total return will be aided by the cash flow that we receive from the regular dividends, the qualified dividends, and these premiums on the call options. JEPQ has an impressive, albeit short, performance history. Let's jump over to my screen and check it out. We're going to use Seeking Alpha to check out the details of JEPQ. I think Seeking Alpha is the best site on the internet for researching stocks and ETFs. And as you can see, I have JEPQ pulled up here. It has a very reasonable expense ratio of 0.35% or 35 basis points. This is great for an actively managed fund. Now, much like the NASDAQ 100 that it's based on, it's very heavy in tech with about half of its holdings in the technology sector. It also has a nice chunk of communications and consumer cyclical, a little bit of healthcare and consumer defensive as well. JEPQ has 91 holdings, and the top 10 holdings make up 48% of the total holdings. Not too bad. Now for the dividend summary, you can see an extremely high trailing 12-month dividend yield of 11.73%. It pays you $5.57 per share for the last trailing 12 months. Taking a look at the charting tab here, for the price return, it's up 16.8% year to date compared to the S&P 500's 14.5%. But what we really need to focus on here is total return, because it'll include that dividend that it pays. So its total return is 26.77%. And if we compare that to the total returns of the S&P 500 ETF, it's at 16%. So JEPQ has outperformed by quite a bit this year. Now, compared to the index that it's based on, QQQ, it's up a monstrous 41% total return year to date. And again, JEPQ will have that lower ceiling because we use the call options, so it stunts the crazy growth potential of the stocks. Now, JEPQ is relatively new, but the total return over the last 1 year is about 32% to the market's 24. QQQ is up 42 in that time frame, and we can't look at 3-year. JEPQ was only around since May of 2022, so this won't tell us much because we're not comparing apples to apples. It's still a relatively new fund, but I have nothing but positive vibes about this one moving forward. Promising future. I think that JEPQ has a bright future, and I like it better than its older brother JEPI, J-E-P-I, because I like the underlying index that it plucks stocks from better. Give me the returns of the NASDAQ 100 over the S&P 500 all day. The index does come with a bit more volatility, but that also helps out the call options. The more volatile the market, the better it is for these options for the premium income. So I think that the dividend yield will stay sky high moving into the future. I use JEPQ within my cash position of my portfolio, along with JEPI and a Vanguard Money Market, VMFXX. All 3 funds pay monthly dividends, and I take those dividends and I reinvest them into whatever the 3 seems to be the most beat up at the time. I should be clear here, these do not replace an emergency fund. JEPQ and JEPI are for extra cash only, as there is some volatility with the price. With all this said, I still roll with VGT, VOO, and SCHD as the majority of my long-term investments. The combination of JEPI, JEPQ, and the money market only make up about 10% of my overall portfolio. But you really can't beat that boost in cash flow now with JEPQ. If you want to see the portfolio that has outperformed the S&P 500 for each of the last 10 years, then check out this video right here. If you dollar cost average into this beast, you will very likely build some serious wealth over any long stretch of time. Thank you so much for watching, and I will see you here next Thursday, and sometimes a Sunday.